Jamie, I guess before we get started, how's the weather over there in the UK?
It's beautiful today, absolutely wonderful. Yeah, we had a really nice weekend. So we've probably had now our 4 days of summer in England. So yeah, tomorrow it'll probably be shocking.
Well, we appreciate you taking time so late in the day over there. Without further ado, let's get started. So, Vivek, if you could scroll to the next slide, please. For those of you who have not attended one of our webinars before, we always like to start on a lighter note, and you know, we'll let you take this one in. I'm sure this is one that resonates with a lot of you, given some of the challenges that you face and that we're going to discuss today. Are you a fan of Dilbert comics, Jamie?
Yes, I am. I was just thinking that this comment particularly isn't obviously about ZoomWorks in any way, shape, or form.
All right, Vivek, next slide. So we have a lot of content we'd want to cover today. This is a basic layout of what we're going to cover. We're going to talk about some of the challenges faced by professional services firms. Of course, many of you, this will be like group therapy. So hopefully you enjoy and feel normal after going through some of these problems. We're going to talk a lot about project delivery, resource allocation, and forecasting accuracy, and generically operational efficiency, and how you can improve that, and get some practical advice from Jamie on that front a little bit later. So we do want to cover a lot in the short amount of time we have together. Next slide, please. So first, some housekeeping. This will be a 30-minute presentation followed by a 30-minute Q&A. We want to give you a lot of time to ask questions because we know you'll have them. You can feel free at any time to submit a question via the text box located on the right side of your screen. You can address questions to Jamie or myself, or to neither of us, and hopefully we can answer them. And we want to get to all of them in the 30-minute session that we have. There will be a poll during the presentation, and sincerely appreciate you responding to the poll if you have time. And it'll be very quick. So thanks in advance for doing that. All right, let's dive in.
So the idea of this slide was just to give everyone a little bit of context about ZoomWorks and who we are. So we are a professional services organisation, hence I guess why we're attending this webinar. We are predominantly a technology-driven professional services company. We split into 3 lines of business: business intelligence, procurement, and technology outsourcing. We've been around for 20 years. 16 years, so 2000 we started, predominantly in procurement at that time, and we sort of morphed into business intelligence and technology outsourcing. Within procurement, basically that's helping companies buy things better, to recognize and understand their spend information, their spend data, try and consolidate all of that, give them the tools and the technology to then consolidate and manage contracts and spend. In business intelligence, we partner with SAP to do their BI stuff. And then in technology outsourcing, we support companies in the UK who wish to grow their IT functions but don't want to do it in the UK. So instead we nearshore them to our offices in either Romania or Bulgaria. So we've done about 230 odd projects, I guess, to date in the 16 years. We're about 230 odd people. And thanks to our wonderful teams in Romania and Bulgaria, we can speak multiple languages and service the majority of Europe. And we have done projects further afield, but predominantly we focus on Europe. Just one last thing. Yeah, go ahead. Yeah, just one last thing. I guess we've been using Replicon for some time now, and I'm not sure, I can't really say it's to do with Replicon, but there is no doubt that the technology that we now have, both in terms of Replicon from our time and material perspective, and also our CRM system, that has definitely supported our growth. And for the last 3 years, we've been growing about 30% year on year. So that sort of gives you a sort of idea of the challenges probably that we've been facing as we grow.
Thanks, Jamie. good overview, and Vivek, if we can move into the next slide. So let's talk a little bit about the challenges faced by professional services firms, and some of these will be very familiar to you. But there's the old saying, if everything seems under control, you're not going fast enough. So, you know, effectively, you want repeat business as a professional services firm. So what do you do to get repeat business? Oftentimes, you offer your services at discounts to customers. But on the other hand, you want to retain your top talent, so you have to keep them engaged and well paid. So it's just managing that paradox of increased costs and decreased revenues, and at the same time trying to maintain profitability. It's like walking a tightrope. And you know, Jamie has managed to sort of successfully do that, and we'll get into some of the ways he's been able to do that later. But we all are familiar with some of the market dynamics. The workforce has totally changed in the last 5 years. You have the rise of mobile, which has enabled people to work remotely from all over the world. You have part-time workers. You have the on-demand workforce, and worker classification in and of itself is just a major, major problem. But what we're seeing on the market is a skew toward going more the independent contractor route. And you know, that shows in the U.S. employment numbers, where you have 90 million Americans out of the workforce opting for more freelance labor type situations. So in short, the labor force has changed a lot in the last 5 years. So, you know, how should a professional services firm manage some of these challenges? You know, there is no silver bullet, but you know, the best way for you to address it is to be more operationally efficient. And so let's get into that with the next slide. Look, this has been a very, very interesting year, and will continue to be. Macroeconomically, we have a U.S. election. We've had some major changes to the geopolitical landscape. So, you know, we're seeing, you know, frugal behavior by buyers and longer decision cycles across the board, both through Service Industry Association benchmarks, but in our own experience. And the chart to the right illustrates that. And you know, some of you probably identify with this, but you know, business days from the identification of an opportunity to delivery of a proposal, 49 days. I mean, that's long. And you see that the same lag exists for proposal to sign agreement, and you know, business days to assign resources to a new engagement. So the lag is real, and that dramatically impacts your business, as you know. And on top of that, if we could do the build on the slide, you know, by 2020, we anticipate that 50% of the workforce will be working remotely, and 50% of the workforce is going to be millennials. And so that plays into this technology point I was making earlier, with some of the things that seemed like they were science fiction projects, mobility, cloud, and IoT, playing a major effect, the modern workforce all using those technologies. So, you know, basically, you know, in short, as the slide conveys, running your business has become way harder and more complicated. And I'd like to hand the next slide over to Jamie to talk a little bit about industry trends.
Yes, I think this was another TSIA industry trend survey that was showing, and it certainly is reflective of in our business. So, I mean, for us, with cloud technology, which has sort of created this sort of disruptive environment and challenged the way that we used to do projects. And I think Zoom was actually set up in 2000 really to be more agile, and to recognize that actually you didn't need 30 people on a large implementation of a project for a year. So I guess to a certain extent we were already ready for what was coming, but even still, I mean, we've certainly seen the number of people on a project reduce significantly, and the full-timeness of those people on projects has reduced as well. So we have a lot of our consultants now that are working part-time on multiple projects at the same time. So trying to actually sort of allocate that resource while still at the same time maintaining sort of client satisfaction is a real challenge for us. So I mean, we are still lucky enough to be getting around 75% on billable utilization, but actually it's a real challenge now. You know, we don't have people now that we can just push out on a client and leave for a year and forget about them on 100% utilization. That's just a thing of the past now. So yeah, multiple projects with part-time resources is a real challenge for us. So obviously that has challenged therefore the sort of the income that we're getting. But as I said, we're managing to buck some of that trend. Also, I mean, if you look at our office, we've got offices here that are capable of housing quite a number of our consultants. We don't see them anymore. They're working remotely. They're working on client side. Our clients now are much more modern and recognise that actually just because you're not sat at one of their desks doesn't mean you're not working on their project. In fact, they can see that you're working on their projects because things change with their system, their cloud system, as we're building it, as we're implementing it. So there's lots more of our consultants now spend much more time on the road or at home. So the whole sort of connected consultant now is much more sort of remote than it was before. And then we've always been dealing, as you know, procurement is what we do. So we always deal with the procurement teams, and procurement teams like to push our prices down. So we're kind of used to that discounting thing, but we're seeing it even more now. Yeah, I mean, we totally agree with these findings really, that utilization is becoming a much harder thing to do. Trying to manage costs is a real challenge at the moment for us, particularly with sort of Brexit. So the euro fluctuation and stuff like that makes it a real challenge with all our teams in Romania and Bulgaria, which are both pegged to the euro. So we're challenged with our costs predominantly, that's our people, and we're challenged with keeping them busy.
Thanks for that industry trend overview. You know, on top of all of this, making things doubly hard, I mean, your customers are just going to expect more with time. And, you know, if you look at the professional services industry in general, it's pretty fragmented. Other than the big 5 firms, the next 50 largest professional services firms account for less than 20% of the annual revenue. So if you're in that boat, you know, as a small professional services firm, you know, be aware that it is not unusual to get a big percentage of your revenue from a few large customers. And, you know, retention becomes key to your business, as you, again, are already aware. You have to retain customers because it's a lot easier to retain those customers than acquire new customers if you're particularly small. But on the other side of that, the customer understands that they wield a lot of power and they want to demand low-risk engagements. And so that's what that chart is to the right, which breaks down engagement type. And so, you know, with fixed fee, you're seeing that the share of fixed bid projects has gone up. But, you know, an underlying factor is that fixed bid projects generate just 35% of the revenue, which means you basically need to be super efficient at planning and executing these types of engagements. And so, to do that, I mean, customers in general demand greater accountability and visibility into individual projects because the tools are available. So it behooves you to have real-time accurate project task tracking and, you know, really keep communication going with the customers. And if we can, show the build for this slide, Vivek. What this table shows is, and Jamie talked a little bit about how ZoomWorks is growing 30% year over year. That's right in the sweet spot. So the balance with being a professional services firm is you don't want to grow too fast, but you don't want to grow too slow. So the sweet spot is 20 to 40% if you're maximizing your EBITDA, and that's what's highlighted in red there. So Jamie, you're in the right sector there.
Yeah, it's good. I'm pleased about that. Although we're trying to, it was amazing. Again, whether or not that's to do with Replicon and our CRM systems, but 5 years ago, 94% of our revenues came from repeat business, and we made a concerted effort to recognise that that was too much. We were damn good at doing a very good job for our clients, but we needed more clients. We've gone completely the other way now, where it's sort of pretty much sort of 20% of our work now is repeat business. That's much more because we're doing much quicker turnarounds on sort of technology implementations, and we recognise now we've sort of gone too far the other way. So it's quite interesting with this graph that there's us trying to sort of get back to a sort of balance of around 50 to 60%, but this graph is actually saying that we're not going to make as much profit if we do that. So maybe I should focus on trying to get more clients again. So yeah, it's an interesting challenge. It's always a balancing act with all of this stuff. So I think from a company valuation perspective, we should be trying to get more repeat business, but also trying to expand as much of our sort of client base as possible.
Vivek, if we can now transition to the next slide. So what do you need to do? And we've tried to break it down here into three core competencies, which is managing project delivery, optimizing resource allocation, and improving your forecasting accuracy. And between those three things, they're all big endeavors, but if you can do all of them, you are on track to becoming a profitable and fast-growing professional services firm, and we're confident that everyone on this call can do that. So next slide, please. So we highlight here some delivery challenges that you face as a professional services firm. You know, the thing is, I mean, service-based organizations that deliver projects on behalf of their clients consistently leave money on the table due to operational issues, and we see that with our own clients as well. So, you know, per some research by IBM, only 40% of change projects meet schedule and budget and quality goals. And another study shows that the average cost of a project overrun is more than 30%, which is crazy. And the top reason for project failure may not be what you think. It's basically not aligning the bid and the sale process with delivery, and so the projects often are set up for failure from the start. So properly aligning sales and delivery teams and managing change is a core competency that basically all of you need to have. And you know, per SPI research, the size of the sales pipeline in comparison to the quarterly forecast is down to 172% compared to 199% just last year. Basically, this translates to fewer available deals, and it just is becoming an increasingly difficult environment to sell services. So professional services organizations have reacted by increasing discounts to win more work, but that just worsens the problem. And so if we could do the build, I know that we have a couple of builds for this slide here. We have sort of a KPI table to the right here, which I'll let you review. But you know, visibility is needed, and you know, you can't. The saying is, you can't steer if you can't see. So you can't redeploy resources to save projects if needed. I mean, you can't give a heads up to customers about status and delivery unless you have the right systems in place. And so a lot of the reason this happens is siloed views, you know, intermediate status reports that you create on a reactionary basis are difficult, and you end up reporting more than you're working, and you skimp on admin and tool support, and that's not good. And if we could do the other build here, and we're all familiar with being stuck in Excel hell. I used to work for a professional services firm, and I spent a lot of my time in Excel for a large consulting company called Navigant, and we had a lot of manual processes, and we've seen it in our own customers. And as you know, manual processes are inefficient, they're difficult to manage, they're error prone. It'll actually just create more administrative overhead for you on the back end, and it'll introduce artificial delays to your project, thus creating cash flow management issues. So you should try to automate as much as you can. And to highlight some of the reasons for errors and delays, infrastructure issues, not having the right processes and tools. I know I keep saying that, but you know, Jamie will attest to that. You know, consultants forgetting to enter time and expenses. You do rely on your people to help you accurately track projects. You got to take them to task on that. And collating information from multiple systems, whether it is a Replicon or whether it is any of the 50 tools that you could be using to do point solutions, that's difficult to do. You see write-offs and billable hours as a result of some of this. And Jamie, I've spent a lot of time on this, but can you add any color to this one, and any thoughts?
Yeah, well, I can certainly add some confessions. We're certainly not perfect in any way, and but we still do resort to Excel on occasions, but it's more for the sort of finer analysis now than it is for the sort of standard basic processes. So we were finding before we had more slick processes than we've got now, we were finding that so much effort went into the manipulation of the data and the correction of the errors in the data in the first place, that by the time we got to the answer that we were after, we'd sort of lost the will to live, to actually action anything that the information told us. So, let alone looking across, we probably have, I don't know, between 18 to 30 projects active at any one time. And the effort just to analyse one project was so extreme that it was crazy. We would tire at the end of one project rather than a dashboard which can show us all 18 projects at the same time, and then we can spend some time drilling in and maybe analysing some in more detail. So I totally agree with all of this lot, and I'm particularly interested around some of the other stuff around employee satisfaction leading to attrition rates and stuff that you were talking about in the previous slide about lack of visibility. Again, moving our employees around all over the place and telling them that they've got to be on this project and this project. Oh, and we got the planning wrong. They need to be over here. That people are very flexible in our organisation, but you've got to look after them, and you've got to give them as much transparency and visibility into their daily lives as possible. So I'm really pleased to say that our employees, according to our last survey, certainly seem to be very happy. So we're obviously doing something right there as well. But no, I think the other thing, and I'll touch on this a bit later, is with all of these systems, the data is only as good as the people that put it in there, and if you don't measure the quality of the data that's going in, then when you actually need to use the data to analyse it, it's going to be all wrong. So from a management perspective, you've got to keep a tight control on this and show everybody that you use that data, otherwise it will go to hell.
Thanks, Jamie, for that. And I'm sure a lot of people are nodding their head to some of your comments. So let's get to more some of the challenges you face allocating and deploying your own resources. So, as you know, how and when you hire and deploy and utilize your people is very critical to your success. So, what does optimizing resource allocation and deployment mean? It means deploying your best resources against the most critical projects, maximizing your resource utilization and billable rates, and reducing attrition of your top talent. If you have poor visibility into future projects, that's a major factor that erodes your efficiency. And if you don't know which projects to choose, when you can start projects, you can jeopardize overall project delivery, and this impacts everything that you do, including making hiring decisions. And I keep harping on employee attrition, but professional services firms rely heavily on talent, so you can't afford to lose your best people. So why do people have, or why do firms rather have poor visibility in the future projects? It boils down to not having the skills and the experience of your own consultants captured, and not having a simple solution to capture time, going back to this people don't record time, which Jamie reiterated, and not supporting resourcing because you don't then get full project visibility. If we could actually show the comic here, and we have a couple of bills on this slide, so we'll start with this, and to my earlier point about attrition, attrition is not good, and we're seeing that firms are having a harder time with it. And this could be due to multiple factors, and not to over-speculate, but as I mentioned earlier, more and more of the workforce is the millennial workforce and the on-demand independent contractor workforce. So there's going to be plenty of opportunities available to these skilled workers, and so you don't want to lose great employees to operational issues. And if we could do another build for this slide. And we have another Dilbert comment here, which I'll let you peruse. But one reason for clouded decision making is you as a manager may like to work with the same people, and it's hard to know what skills and experience different people have, and hard to remove politics from the equation when you're thinking about resourcing projects. It's just that's a difficult type of behavior to manage, but you're putting yourself in a better position if you have the tools and the technology tools, and you capture employee skills and make decisions as much as possible driven by data. And obvious things like you don't want to overtax your best resources by overworking them. You have to have a strategy around developing your talent, and it's just like it is more efficient to work with existing clients, it's also more efficient to keep existing talent happier rather than having to ramp up over and over again, which is why the attrition issue is so critical. Jamie, do you have anything to add to that?
Yeah, I mean, so there's enough uncertainty in a professional services organisation as it is. The last thing that you want, therefore, is anything that you actually know is certain, that you don't actually act on that data. So stuff like resource allocation, and again, we're not perfect, but if you sort of measure what our forecast allocation is compared to what our actual billable utilisation for that same week is, we're still about 10 to 15% out, which is crazy, really. I mean, that's stuff that we know about. And so going back to your point about hiring decisions and stuff like that, as I said, there's already enough uncertainty when you look at a pipeline of work that's still to be delivered based on how sure you are that you're going to win that work, or if you've won that work, how sure you are that you can deliver that work in the phasing that you've actually planned it out in. So there's already uncertainty, but if stuff that you already know you still can't get right, then you're just adding more and more uncertainty. So, I mean, there is no doubt that we are so much better than we have been, and there is no doubt that that has saved us from hiring when we didn't need to hire. It saved us from, we've never had to lay anyone off, which is great as well, which I feel is to do with the fact that we're getting better at forecasting. But we're still some way to go, I would certainly say, in terms of acting on all of the information that we've got and trusting all of it. As I said, we're probably still 10% out, so we've got work to do. The other thing that's very interesting, and this gets really into the practicalities of the whole thing, but is trying to drive down the ownership of that data to the lowest possible level. I don't mean lowest as in most junior, I mean as in pushing it down to where the data is most important. So for us, we're trying to push that allocation responsibility down to the actual employee that's being allocated. At the moment, we're probably sitting at the project manager doing that work. But if you look at it, we start a project, and let's say a project's 3 months. We start a project, and at that time, we just know that this particular resource is going to be 40% utilised on the project throughout the life of the project. So all the project manager can do at the start of that is to say, this person is 40% per week on this project. So another project manager comes along and has another project, and he also needs this person 40% of the week. So it's easy enough in a system to be able to say, well, that means that this employee is 80% utilised for every week, and therefore we don't need to worry about that employee, everything's good. The trouble is that when you then get down to the more accurate level, which is, okay, what's happening next week, you suddenly realise that that employee is required Monday and Tuesday on both projects. So suddenly you've just potentially lost 40% utilisation on that, because actually they only could work Monday and Tuesday on both projects, and neither project needed them on Wednesday, Thursday, Friday. So those are the kind of things that I'm sort of trying to push down to the employee, which says, actually, you know now that the project manager's only allocated you 40%. It's up to you now to be able to say, right, I'm going to be Monday, Tuesday on this project, I'm going to be Wednesday, Thursday on the other one, and I'm going to do Friday working from the office on administration or on innovation and stuff. So that's the kind of practical stuff that I think everyone needs to get to, is try and push it down to where the person knows and can make a difference on a weekly basis.
Thanks, Jamie, for that. That's a great insight, and I think people can actually use this to think about this very critical problem. Just a quick time check. I know several of you have questions. We already have a couple of them submitted. So first order of housekeeping, please submit your questions now if you can, because we're not going to be able to get all of them. It looks like we'll be running a little bit over on time. Looks like, okay, all right, we have a couple more rolling in. Great. So take the time to ask your questions. I'm going to run through these next slides so I can focus on Jamie. Jamie, when I hand it over to you, you'll have about 10 minutes to go over your slides, and then we'll open it up to Q&A. So, all right. So let's talk a little bit about uneven demand. Look, all this is basically saying is, if you don't hire in anticipation of a new project, that could mean project delays. But if you hire in anticipation of new projects, that could be extremely costly. But uneven demand is the norm, and there's going to be boom-bust cycles. And the reasons for uneven demand, you have a few customers that account for a large portion of your revenue. Work demands for individual teams are always uneven just in general, and cash flow is uneven as payments increasingly are tied to project completion. So, we want you to know that surfing this boom-bust cycle is going to be key for your business, and estimating project hours and costs becomes more and more critical. And whereas before it was more of an art than a science, technology has made it easier to make this more of a science than art. So we do encourage you to think about planning before accepting proposals, and that way you can manage delivery and everything else with confidence. Next slide, please. All right, let's get to our poll question, and I see questions rolling in here. Please, once again, use the chat window at the right of your screen to ask questions. But for now, if you could please answer the question on the screen: what is your most pressing challenge faced by your professional services firm? And if you could select one of the following categories that most closely fits you, that'd be terrific. And thank you for doing that. All right. I will give it another few seconds to answer the poll. And Paratosh, Vivek, if we have enough to show some results, we should start wrapping this one up. Interesting. Okay. So revenue leakage is a big deal. We've written a white paper about that one. Not surprising, but across the board, surprised to see project delivery a little bit low there. But in general, this is good information. Okay, I would now like to hand it over to Jamie. Jamie, can you tell us a little bit now about the solution to manage challenges and growth?
Yeah, sure. If you want to go to the first slide then. So I will preface this with, as I said, we're certainly not the finished article. There's plenty more that we can go at, but there's no doubt that we've, over the last 5 years, I think, moved on quite considerably. So I believe that at a rough estimate, we reckon that we're probably getting about 20% more project work through what would have been, I mean, it's difficult to assess. We're growing, but we reckon without an accurate time and forecasting system, we would probably need 20% more people to deliver that work if we hadn't managed it more tightly and more systematically with the technology that we've got. So that in itself is a pretty good business case, I would say, for justifying the right technology. I also think that if you're looking at the sort of consistent execution, what we do now is that quite a lot of our work is fixed price. and quite a lot of our work, particularly around these sort of more specific technology implementation stuff, quite a lot of it can be repeatable. So we've spent an awful lot of time trying to build up playbooks on how we deliver our work. Now every client's different, and the sort of cloud approach is, we're going to implement best practice processes for you, but at the same time recognizing that everybody wants a personalized solution. So there's a much more of a documented process that we follow that still allows us the flexibility to personalize the solution for each client. And what we now do is we take the lessons learned and we feed them back into the sales team, such that our statement of works that we prepare, which are against the fixed price, have all of the time estimates against the specific task areas. And again, this is a balancing act about how deep do you go down in capturing time. So we've sort of felt that we should be pragmatic. So we've sort of kept it at the level that we would bid for work. In other words, talking about, well, there's change management, there's supplier enablement, there's system configuration, there's UAT, there's what have you. That kind of level is where we capture our time. But we feed that back into our statement of work preparation for subsequent sales processes. So we've kind of got this link between, this is the standard way we deliver, this is therefore the same standard way that we capture time, and therefore also link back to, and this is the standard way that we then bid for our work. And if you can kind of tie those three in, then you've got a sort of feedback loop then of, actually we completely blew it on the estimations for configuration, or actually isn't it interesting how the configuration element of time tracking was way over for this client and way under for this client. What is it about a client that we can understand, and therefore feed that back into the statement of work preparation, which says this client is of a specific type, and therefore when they're of this specific type, we know the configuration element is longer. So that whole kind of feedback loop and tying it in with a sort of consistent execution and playbook approach is working very, very well for us. And the second one there about the real time, so again, as I said, it's that feedback and making decisions. And I think the more you can show the team that is using your systems that you are making decisions on that data, the more accurate that data becomes. If people just feel that they are writing data into a void and that data is never used, then there's much more of a chance that that data is inaccurate and not good. We've got a bit of a revenue leakage issue, but what we find now is that we've got a much clearer view such that we can make much more deliberate decisions as to whether or not to actually give that work away for free, because we understand the whole thing, we recognise that some of it might be our issue as well as the client issue, whereas before it was an uneducated decision. In fact, it probably wasn't even a decision, it was just revenue leakage. So those are the first 2 points. I think there's a build to this slide. So the other area that's really benefited us is before all of our time collection was done on Excel spreadsheets, it was done on a homegrown built solution that actually you couldn't extract data from. And so the whole invoicing process was just a real headache. So as I said, we've grown about 30% year on year for the last 3 years, and we've pretty much managed to do all of the revenue, the invoicing processes with the same team, and improve the efficiency of it and speed of invoicing as well. So because the data is all in there, we can process it much quicker. As I said, we've still got a few challenges. So there's some sort of fairly complex invoicing rules on some of our stuff that we're not quite there with. So we still do a bit of manual manipulation, but if when we crack that, we'll be even more efficient. As I said about the bringing management discipline into resource allocation, so that is at all levels. It's from the employee who says, I know I need to be used on Monday and Tuesday on this project and Wednesday and Thursday on the next project. It's for the project manager as well to sort of have that process which says, a month out, I only might know it as 40% needed on a weekly basis, but a week out, I should know I need this person on a Monday and a Tuesday. So getting that management discipline is really key. As I said, as a result of all of that, I think we probably improved our utilisation between at least 10%, I would say, because of the visibility that we're getting out of the systems and the fact that we're acting on it. And as I said before, this sort of feedback loop of, okay, well, if I can capture the data the way that I estimated this proposal, then I can now feed that back and say, well, I proposed this, I actually did this, what lessons can I learn, and create a feedback loop to all of that stuff. think we're there on that one. So just as some sort of points of how we moved from and to. So before the professional services automation tool that we had in place with Replicon now, it was very manual time tracking. There was no resource allocation at all. It was all done on external spreadsheets with a finger in the air. As I said before, I think there's enough uncertainty in professional services organisations anyway. You are to a certain extent at the beck and call of your clients. So the more you can make the use of the data that you do know to make decisions, the better. And as for mobile access, there was none. And obviously now with our clients, with our employees never coming into the office, working remotely, working from home, wherever they want to work, to be quite honest, they can now fill in their timesheets. We've removed that excuse. So the other thing is that we're 230 resources. We're adding people all the time. We're adding people in UK, in Romania, in Bulgaria. We've got third-party resources, contractors. We wanted a solution that was used by everybody but didn't require a heavy amount of training. So we don't train people that come on other than to say, here's the system, here's the access. The rest should be self-explanatory. And again, the more we measure the data anyway, the more, if it's not self-explanatory and we somehow have come across a contractor who doesn't know how to use it, within a week they will do, because we're using that data and we can see it's wrong. So all of this has led to our ability to measure and improve our project profitability, and subsequent client satisfaction is fantastic. So that was around the track. Around the understanding, we didn't have anything to do with managing multiple billing rates. As I said, we're still not there. We have some complex billing rules that we still haven't sorted out, but in general we're much better there. And as for sort of fixed price projects, it was all Excel hell, and we're not there now. We're much improved. We've got much clearer view, particularly around our fixed price contracts. We can recognise project profitability, and as I said before, we can take commercial decisions as to whether or not actually this additional work is a change request, this additional work is work for free. Either way, it's very clear to the client that this is the decision we've taken, and these are the reasons why. So, so that's our understanding. And then around optimizing, resource allocation has definitely been a huge eye-opener for us. Employing people is a risky business, and we want to do it based on as much information as we've got possible. With the resource allocation, with the assessment of skills needed for various projects, we can see where we are likely to have resource shortages, and we can better support our hiring decision. So that's all cool. The reimbursement stuff is really key for us. We pay our consultants an element of a rev share. So basically, every time they are chargeable for a day, we give them a portion of that chargeable rate as a bonus. So it's quite key for them that every month they get recognised for the work they've done. So that is a process that now has been completely transformed, so that's great. So happy workforce, I think they were before, but maybe they're even more happy now. Our proposals are much more accurate against our actual delivery, and in terms of invoicing, I would say at least 30 to 40% improved. As I said, we're managing probably twice as many projects with the same workforce as we did 3 years ago, and still invoicing on time.
Jamie, thank you for this. It looks like this is perfect timing for Q&A. Vivek, we'll leave everybody with this last slide, which you just built to. Look, obviously this is a Replicon webinar, so we're gonna plug for Replicon a bit, but independent of that, cannot emphasize enough the importance of having something in place. And this data is provided by the TSIA. And you can see, the most striking stats here, we talked a little bit about the beginning of sourcing projects and getting to sort of proposal and more final stages. If you have PSA in place, you're going to get there faster. And at the bottom, your ROI is going to increase. So get something that's not manual in place, and you'll be happy, and you'll be able to run an efficient professional services organization.